You said costs for 2019 per mile flown will rise 3%, which was more than analysts were anticipating. But you're not happy with that. You vowed to squeeze that. How do you plan on squeezing a little bit more out of 2019?
Well, good morning, and thanks for having us. Yeah, that's obviously not a result that's satisfactory to us either. That's the preliminary view, and we've got a lot of work to do. So the main thing that we need to do is make our efficiency initiatives a top priority. We've been investing in the airline. We've been investing in airport infrastructure. We've been deploying new technology, and those are at higher levels, and we'll want to grow into those investments over time. But as I've been saying earlier today, it's just time for us to make driving the efficiency through the organization a high priority, and that will be the case for 2019.
Now, revenue trends are healthy, according to you guys, but perhaps you're not able to ask for as much extra going forward as some of the other airlines. Is there a problem with the expansion of basic fares across the industry? Is it becoming a problem for the major companies like yourself and perhaps JetBlue who are in that category?
No, I don't see that as the case at all. If you just look at our domestic revenue production here in the third quarter, it was well ahead of our system average. So we've seen some weakness in Mexico. Unlike some of our bigger competitors, we just don't have a lot of exposure internationally to offset some weakness in Mexico, as an example. But aside from that kind of a unique matchup, we've got strong revenue trends underway here in the fourth quarter. I'm expecting even stronger trends for 2019. We have a number of initiatives that are underway to drive better revenue production, and we just don't want to resort to those kinds of tricks and techniques, if you will. We just want to have transparency with our customers. We don't charge bag fees, we don't charge change fees, and that's worked very well for us.
Gary, good morning. It's Guy Johnson.
Good morning.
How much of the increase in fuel costs have you been able to pass on? I know you use your balance sheet to hedge, so it's not as big an effect, but nevertheless, are you recouping that?
I feel like we are. We had record net income per share here in the third quarter. So we're a good $500 million over our fuel budget, but we've been able to absorb that very, very well. Obviously, the tax reform that went into effect late last year has been a big benefit for us too, offsetting a lot of those fuel cost increases. But we're very well hedged for 2019, and we won't offset dollar for dollar, but we've got great protection in place. As you notice, we've got cash well in excess of our target. We've got $3.8 billion in cash and very modest debt. So we're very well positioned financially. Who knows where fuel prices will go from here, but if they go higher, we're very well protected.
Gary, one of the things that low-cost carriers in Europe have to deal with at the moment is a significant overcapacity story. There are simply too many airplanes flying and too many empty seats as a result of that. You in the United States have consolidated heavily already. Is it just like a different capacity story over there? Is capacity growth just going to remain muted, and is that just an ongoing story that's now locked in?
You know, in the short term, you can only add so many flights, and we have a lot of airport constraints in the U.S. as well. We get a lot of complaints from the investment community here in the U.S. about capacity growing too much. But the fact of the matter is, you're right. We have very high load factors. We've got a very healthy revenue environment. And I don't study the international markets. I don't know the international markets nearly as well as I know the domestic market here in the U.S. But we certainly aren't having the kinds of problems that you're describing. And I don't see signs that that's going to emerge next year or the year after or anytime soon.
Gary, why are investors punishing the stock so much today, just briefly?
Well, I need to talk to them later this morning and make sure I understand why. But obviously, the headline that you were reading back to me is the concern about cost increases for 2019, and that was your first question. So it's full disclosure here this morning. We've got early indication. I'm not satisfied with that result, and I just wanted to make sure that that our investors had the right expectation. I would quickly add that we are expecting a very healthy revenue environment for next year.
Yes.
So we've got industry-leading margins here in 2018, and I would expect that to continue in 2019.